We pray for better days.
Welcome back, another video today. A lot of people are asking me about what are the basics of analysing a price action chart. So that is any chart that shows the price of a share versus time. What information can we derive from those in terms of trends, in terms of support and resistance, stuff like that. But before we get into that fancy stuff, we need to know the very basics, and that is how to analyse a chart. So when you look at a chart for the very first time, certainly I find it a little bit confusing. There's a lot going on. But I think that if anybody knows the basics, then it can become second nature to them quite quickly. So let's go ahead and have a little look at a price action chart. Here's one I pulled up earlier. So this is from TradingView. So the first thing you notice this line, of course, that is the price on close. So when the session ends of trading each and every day, because this is on the daily, then this price is plotted on this chart. So you can see right here it moves up and down. Worry about that later. We're just worrying about what this information along the X and Y axis means, and what these little bars are as well, and what information we can derive from those. So first of all, any price action chart, so that is any chart that shows the price of a stock share, any sort of asset with time, will have on the Y axis, it'll have the price. So you can see here, this is the price in dollars and cents of this particular share at each and every line. You can see just here on the chart, and along the x-axis you can see the time. So because this chart is a daily chart, each one of these little denominations corresponds to a day effectively. So anyway, those are the very basics. After that, we're starting to look at what these other lines and these little bars means. So any chart, I found this very useful when I found this. When I initially found this out, any chart that shows the price of a stock or share or gold or anything like that on spot, so that means anything that you can buy and you will be given it straight away as opposed to a future. It only has two things on the chart. It has volume and it has price. Okay, so the prices on this particular chart is just what the price was at the end of the day's trading, plotted onto the chart. This is volume down here, so this is the total amount that is bought and sold each day, plotted on the graph. A green one means that the price went up that day, a red one means that the price went down that day, and it's just how much volume was traded. So for every buy there has to be a sell, so it's just the total, the cumulative total, okay, on each and every day. Then after that, we'll just look a little bit more at this line that's drawn here. So you may or may not have noticed that I said earlier that the price plotted here is the price on close. So that's the price at the end of the day's trading. There's actually a little bit more information than that. So this is a line graph. There are also two other types of graph. One is called a point and figure graph. I've never actually seen one of those, so you can pretty much disregard those. And then the other one is Japanese candlesticks, which are really useful, which are here. There's also bars as well, which I should mention, but that's used less commonly too. So the main one that you're interested in, the one you'll use most often, is the candlestick one. So you'll notice it gives us a little bit more information than just a line graph. The line graph just showed us this price, which is the close price. This has got all sorts of little columns, little lines going on, which we'll explain in just a second. So let's just pick one. So we can see here, this is one candlestick. Because this is a green candlestick, what that means is the price went up that day. This red candlestick means the price has went down during that day's trading, because we're on the daily, of course. What this line means, this is known as the wick of the candle. So this is how much variation or volatility there's been intraday, so within that day. So during this candle, during this particular day, we can see here the price opened here because it's a green candlestick, so the price went up. So it opened here, it closed here. This was the high intraday, so during the day, and this was the low. Okay, so open, high, open, close, sorry, high, low. All right. Let's look at the next candle. This is the day after, 5th of August. What happened here was the price actually opened higher. All right, so some bullish sentiment. There was a lot of buying going on. The price opened higher, but then it closed lower because the market ran out of steam. So when we got a green candlestick versus a red candlestick, it just means that the open and the close are flipped around. So this green one, because the price went up, it opened here, it closed here. Because the price went down, it opened here and it closed here. And that's how you use Japanese candlesticks. These little lines give you a bit of information as well, because they tell us just how much volatility there was during the day. But that's a whole separate book in itself. We're just going to teach you how to use these for the first bit. Okay, so hopefully you've got your head around that. After that, we look at the time frame. So when I'm analysing the chart, I pick the biggest time frame possible. Now this is not a great time frame because there's not that much price history for this particular share, Orion, whatever that is. You can see here that it's only been trading for a few years, so there's not that much price history, so it doesn't really tell us that much. So that's on the monthly, so that means each one of these candlesticks represents a month. Let's jump right down to the week. That means each one of these represents a week, so we've got a little bit more price action to go on at this point, and maybe plotter trades and things like that. You can see it had its all-time high right up here, 25th of July 2016. Week ending 25th of July 2016, 317, and it's been bouncing around down here ever since. And then we go right back down to the daily, and you can see it's had a little bit of a spike recently, or a boom, I suppose. When you're analysing the chart, it's always best to pick the biggest time frame possible and work your way down. So we can see here the monthly is not much use, the weekly wasn't much use, but the daily is giving us a little bit of history to go on. So I would plot there first before I start getting down to my smaller time sets, smaller time frames. This is the 15-minute one. You can see it's bouncing around quite a lot. It's quite a gap, a little bit gappy here. What that means is there's a lot of volatility. Cool, so always start on the biggest time frame possible and then work your way down, because it's possible that you might have your analysis totally invalidated by what you see on a bigger time frame. So it's important to do that. Little trick for you. Definitely one I would watch out for. And then after that, the only other thing I would say on the charts that I find quite useful is if we go out to the monthly just for the time being, we pick this setting, which is logarithmic. What we've been looking at beforehand is an arithmetic. So what that means is it's just your bog standard 1 to 10, or your standard divisions between each number. This turns them into a percentage difference between each number. So what that means is if we go from 1 to 3, that's a 3 times move. Then the space between 3 and 9 would be exactly the same. So it evens out this volatility, because as price goes up, the increments get bigger, and therefore it makes the price look skewed, so therefore your analysis may not be correct, or it may not be accurate. So if you even the price out, you can draw these trend lines on a lot better. Let me just show you. I can just find trend line here. There it is. So you can see here, this actually follows quite a nice trend line, and I bet if I take this off, it goes all weird. You can see it's just busted right through there. It's not as accurate. Okay, there's a little bit of a trend line there, but we can involve this candle here right at the top if we use a logarithmic scale, so it makes it more valid. So therefore, what I tend to do is I just use logs on larger time frames, because it evens out these little bumpy rough spots in price where they can become inaccurate if the price grows, because when the price grows towards the end, the higher kind of figures, then it'll skew your smaller prices when compared to it. So hope that's useful for you. Anyway, these are just the tips and tricks that I've picked up somewhere along the line whilst trading. I hope they'll be of some use to you. This is very much the fundamentals. I definitely think it's a good idea to watch this video before you get into any of your more fancy technical analysis. These are the bare bones, the basics. So hopefully you've enjoyed, and it's very nice to see you all once again, and I'll see you all next time. Cheers.